things. Back to you, Taymor.
Maura, thanks a lot. Stick around, though, because we're going to talk about this a little more with Charles Chaw, who's Director of China Knowledge Consulting, and he joins us now from Hong Kong. Charles, do you agree with the market's assessment today?
I think there are two wrong things happen today. Overpriced, 6.7 times is indeed higher than the peers like NOL, and other shipping companies. And also today there are three stocks IPO, and not just this company. I think that is also a bad timing as well. And the undersubscription from the public is a clear indication that the public is not interested in such unexciting stocks. Shipping has always been institutional play, is a long-term thing. Yeah.
So it's a sort of IPO fatigue that they're suffering from right now. But what about the fundamentals of this company? I mean, is there an investment there that's worth it?
I think the public as well as institutional investors are very concerned with the trade, as in possible trade war with the United States, with the EU, and we see Peter Madison's negotiation with Bo Xilai, the trade ministers, and also expected trade war or sanctions from the United States. So is a primary concern. But looking at the first 5 months of the trade this year alone, we are seeing $550 billion of trade. That is more than last year's. So investing into Cosco is really is political as well as other risks involved. Yeah.
Charles, Maura here. A quick question. Cosco obviously is tied into China's economic growth story as well. And there are some that are saying that you could see China beginning to slow down in 2006. To me, that's worrying, right? It's not just the U.S. economy; it's also the Chinese economy, which has been driving Asian growth.
I mean, the fear is not only the fear that the trade wars or sanctions, but also there's expected that the freight rates might come down like between 6 to 9%. So it's also a very concern to investors, be it in institutionals or those big-time fund managers.
Right, you mentioned freight rates potentially coming down between 6 to 9%. Cosco China itself is saying it expects its profits to be about 18% lower. It's guiding that number. Is that a realistic number?
It's possible. Like I say, the first 5 months of trade alone is growing very strongly. And the second half, we see that the Christmas is coming, and even trade sanctions or any negotiations with the EU or United States will take some time to happen. So I think trade is as usual. We see very strong export as well as import.
What about the sort of in general, though, in this particular industry, shipping, freights, I mean, is this a wise investment to make long term?
I think Cosco has a card to play here. That is, it can go into port developments, which is now, if you look at the balance sheet, 20% of the sales comes from managing ports. So there are more and more ports, and going into that business is also pretty lucrative, and that might help their balance sheet.
Okay.
What are the expenses at Cosco? I mean, where are they spending most of their money? Where are they making most of their money?
Okay, they're buying big vessels. They're buying the largest vessels in the world. I think about 9 of them. And looking at that, they are still focusing on doing a lot of shipping business. But longer term, I think they will, might move into managing ports, and there'll be some forms of M&A happening in the world, somewhere in the world. Yeah.
All right, Charles, we'll leave it there. Thanks for coming by.
Thank you.
Charles Chaw.